What's the most money a company has raised in a seed round that you invested in pre-product?
Okay, great question. Seed round pre-product. I am very much of the belief in investing in companies right after they launch their product, and I can play with it. So I think a company like Superhuman, because Raul had done a company before, was able to raise a decent chunk of change in their seed round. It was, many millions of dollars, but it wasn't over 10. And then looking at, let's see, I was in a later round of Medium, but I think Ev probably raised a decent chunk of change. So serial founders like a Mark Pincus or Elon with the Boring Company, forget about me being involved in them. I'm not in the Boring Company, but I am in Medium, but a later round. They tend to raise 10 million for 10%. That's what I see a lot of the times. And so it's an outrageous valuation when compared to the average, and probably the founders are getting a 5x, 10x premium on their previous experience for good reason. They're going to get the product to market. They've done it many times before.
Yeah. It's just interesting how 10 million versus 250 million, right? It's just such a wide gap.
It's huge. And it's the problem with raising that amount of money. I've seen it happen in later stages is the whole team gets off their game, entitlement goes off the charts, and you have so much money, you basically drowned an opportunity. It would be the equivalent of like putting a chef in a Costco or something, like a giant warehouse and saying, turn it into a restaurant. And it's like, okay, where do I even begin? There's every single food item in here. It's just too much. It's too overwhelming to go that big, that fast. And it distances the core team from reality so much. And reality is the customer, that they start arguing over things like chairs or the receptionist's desk, or where the office is located, or what the laptops are, and how many gigs of RAM they have. Whereas in a regular company, you're like, holy shit, we're almost out of money. We better get this product to market. And you need to have constraint to be a great artist. Actually, a better analogy than the chef would be, just imagine you gave an artist a canvas the size of like a giant mural, like the side of a building, and you just gave them, giant, oil containers, milk trucks of paint. And you're like, go ahead. They're like, there's a little bit of a big canvas here. Where do I even get started? That's why constraint makes great art. Bob Dylan said, they were like, hey, why did this album come out? Why did you make the album? He's like, well, I owed it to the record label. And people were like, oh, well, that's completely disappointing as an answer. It's like, yeah, my back was against the wall. I had to get it out. I couldn't delay the record label anymore. So I had to, get my term paper in. In this Bob Dylan's case, it was the album.
And it feels like now the tools are available where people can create products so inexpensively and so quickly that they can get something, it maybe not even fully into the market, but to hand you that it's almost inexplainable, unless you're working on something that's a really hard tech problem, why would you go raise money before that? Right.
This is such a great insight, Pomp, because I deal with founders all day long who tell me, if you give me $100,000 or $250,000, I can build this. And then I say, that's great. And I'm flattered that you're contacting me. I have a long list of people who've already created stuff and who have 100 or 1,000 users who are asking me for $250K at the same valuation. Why would I pick you over them? And like, well, I have great potential. I'm like, you're telling me that. They're showing me that. And really, that's what I think a lot of young entrepreneurs don't understand is the people who get funded in today's market, because of what you're saying, it's so cheap to build. If you wanted to build Clubhouse, or if you wanted to build a podcasting app, or whatever it is, you could build it in a weekend. Sweat equity, 2-3 people. You don't need all that money. And so you've basically signaled to the market that you are a permission asker. You're somebody who needs permission or validation in order to build. Whereas other people, they're going to make their album. They're going to tell jokes if they're a comedian. They're going to make a short film if they're they're going to write their screenplay. They don't need permission to do it, right? And that's where founders get tripped up a lot, is that they ask for, they're looking for some validation from an investor, and really they should look at the investor as somewhere between a checkbook or ATM and a coach or a close friend who can give them candid feedback, right? That's really what you're getting when you're getting an angel or seed investor. Somebody who can be candid with you with advice, maybe introduce you to people, just be a good friend, and on the margins, a little bit of money to spend on marketing or hiring that third developer. But you really want to be a developer, which is why Combinator says you have to have a technologist on your team. You need to have a developer, a designer, somebody who can actually build. And if you can't build, well, what's your goddamn excuse? Like, go on YouTube and type in how to build a website, how to write code. And people are like, oh, that's ridiculous. It's not actually ridiculous. There's freecodecamp.org. I had them on the podcast. We made a small investment in Lambda School. There's Lambda School if you want to pay money, and you can do it on the come, right? You don't have to actually pay them up front. You can pay it on contingency with an ISA, income sharing agreement. So
ISA.
Yeah. ISA, yeah. There's like so much interesting stuff out there. You really have no excuse